is going to be a quick little update on outlook for these things. Yeah, so this is going to be a quick little update on outlook for these things, what this gap up means, and how I intend to continue to short this and have short side focus on this. So I gave back all my profits on the original short, right? I mishandled the position and I kind of chased the following entry after we got the reclaim of 576, right? I obviously had a position that began at 590 on June 30th puts, and I averaged in a little bit too early on this Monday, thinking that after hour sell would develop our lower high. Not really fully grasping the relevance of just liquidity and where the draw is going to be too. But nonetheless, I caught a decent short, right? However, I covered my position a little bit too early for what I wanted on this trade, right? Obviously, I think in my opinion that this is a redistribution, especially with the lack of any structural sound higher lows that are established throughout the April to May rally. But these things take time, right? And that's kind of something that I forgot to some extent as far as the potential for this to take time, right? And how it's not going to be one quick aggressive move to 564 to 550, and how these things take time. You want to wait for a clear-cut signal, right? And that's kind of what I didn't do with that Friday candle closure, right? We obviously had the lower high that was developed on Thursday, and that's where I ended up selling my position at the 0.5, right? And I think that didn't end up getting me with this gap down right to that 576 to 577 target. And I positioned myself again on 581.47, which is a relevantly important area to fail on a daily perspective. I thought this could be something similar to the March 7th print, but, understanding the relevance behind the relatively stronger daily closure. The price action intraday was pretty weak in terms of subsequent highs sold off, but didn't get that fall through to close, didn't pin it under the, quarter one floor to some extent that was established as resistance, and then broken above and now pinned, right? And got caught up in a nasty 1% gap up and took a 28 to 30% loss on those puts, right? And gave back on my profit, right? So at least, the optimistic point of view on this scenario is that it was all profit, right? I just essentially caught the move from Monday's high to last Friday's low, or not last Friday's low to here, $14 move, missed out on this last $5-6, and then gave back my profit, being a little bit, a chasing decision in terms of just execution mentally, missing out on that last little push and taking on new risk into the weekend, right? I would have had no issue holding to my original plan, trimming 17 contracts, trimming 10 at 5, or trimming 7 at 581.47, trimming 5 at 577, and then holding the last 5 risk-free into the weekend and taking those off break even as we open up higher this week. But I took on new risk over the weekend because of my own errors, so that's something I can fault myself for, I can get mad at myself for. But we move on, right? It was a break-even trade, right? A break-even trade, but something that showed me a really nice sign in terms of what's to come, I think. And now we have this 1.5% gap up and a little bit of continuation, and I think this is potentially reminiscent. Obviously, this is a completely different scenario here in terms of massive footprint and subsequent digestion during a short week. But we also have a short week here, right? And this could be kind of reminiscent of this April 21st candle. Just the concept that you have, such an aggressive move, right? You obviously have the after hours sell and the Moody's downgrade, the retail buying trapped at the highs, and then the gap down on Tuesday, the gap down on Wednesday, that fades the lower high, which is your kind of initial change of character on this extended hours chart. If you pull it up, that's your discounted lower high here. But they leave the gap unfilled. They're layering dark pools, and I think that's just going to be where the draw is to, right? Especially with how imbalanced this print is, right? This was a very aggressive sell-off. I saw something as well that this could have been a systematic sell-off that occurred when bonds or yields traded above or below a certain spot. So that could be a pretty big red flag as well, right? But look, you can even see, I don't even have dark pool data, right? They're layering the 592 spot, the large seller up there, the large gap. That's the full digestion of this move. And so that's going to be my focus, right? That's going to be what I'm looking to execute on this week's short side. But I'm also going to take into consideration the context of this nwog and the 581.50 spot, right? Um, this, I doubt, I highly, highly doubt. I don't want to get speculative. I don't want to try to predict. I have a high doubt that this is going to be our top. I have, I understanding the context and the relevance of this range and just the sloping upward pattern, the exhaustion, the reversion to the mean, and then the gap up here. I feel like when you see how this develops, you want a more notable footprint. It doesn't even have to be a footprint. It can be kind of similar to this February sequence, um, where you have the notable signs of a seller and the clear exhaustion into that window, right? But more or less, I want something a little bit more notable as far as trying to top ticket, right? I don't know if this is going to be the top. I would be ecstatic if it wasn't, because it would just mean we get better shorts higher. But it all kind of depends, right? And a lot of it kind of depends on the NVIDIA report. There's a large seller on Wednesday off the 113 or 135 spot. And now we're seeing, we're up 3% this day. And if we run up into the report, right, if we run up another 5.5% into the report, or maybe run up another 3 or 4 into the report and gap up around this 142 spot, right, where that deep, steep gap was established, where we failed this, but there could be some leftover orders and some liquidity built up within that range. That right there could be a phenomenal short-sided trade and could kind of offer an opportunity to capitalize short-side on SPY, right? I just want to kind of preface here that, it's a short-side environment, but it's not so clear, right? Like, I don't think that this is going to be, if they establish a lower high discount, that'd be nice, but I don't think that this is going to be deep enough. I think if anything, you would kind of get something like this, a high or low reclaiming the Thursday's close, and then a push up to 592, and that would set up to the nwog short, right? But I don't necessarily think that the discount is going to be deep enough with the imbalance behind it on Wednesday's print and the gaps above on Tuesday and Wednesday's gap downs that are unfilled, right? This is nice volume. This is the highest volume we've had since the 10th that day, or since the 11th, that 2 days after the April 9th reversal, right? But this is something that I just want to preface takes a lot of time. I do think this is a redistribution. I do think that this could be our UT, and I do think that this range can spark a move down to 564 before the June flows come into play, right? And that is going to be a focus of mine. But I'm going to take this, I don't want to say slow, more or less smart, in comparison to how I traded it last time, right? Last week, and how I traded this on Friday. So a lot of this for me is just waiting, right? I think that if we push up to this 592 spot, that's going to be, that to 595 is going to be my short-sided trade, just because of the the layering of those gaps and the relevance of that range. Or even seeing, yeah, it's wild. Because of the relevance of that range and the full digestion of that Wednesday print and draw into those dark pools, right? That's going to kind of be a focus of mine. If I can begin positioning up there, I'd be happy with that, right? I would be happy with that because the fact that I think it's a relevantly important area within the chart. And when you have an nwog like this, where already kind of seeing the signs of a distributive look and a draw into an area where there's a larger amount of supply, right? You see the sell-off open, the draw into the gap. And this is very unstructured, very inconsistent. This is a very bearish intraday move already, and the move in general was off of news that wasn't even news, and was insanely low volume on Memorial Day weekend, um, floating higher into that discounted lower high range on futures. So this is something I'm looking to short. However, I think I'm going to put the 564 short on hold. I think what I'm going to do here is begin positioning around that 590 range to 592 to 595 on July's. Probably going to get about, ideally I'd like to get about 15 contracts, about 10 to 15 contracts, with kind of my risk being a buyer breaking and pinning it above these highs, right? Obviously, if we trade above these highs and redistribute and it gives you a notable daily footprint, I would be pretty confident with that. But my focus here as far as executable trades that I have a lot of confidence in, um, is going to be, this 592 range to 580 to 581, right? I'm going to look to take it to the nwog. I'm probably just going to go June's. I think June 20th are perfectly fine here, simply because of the fact, I may go June 30th just to be a little bit of a pussy. Simply because of the fact here that the way that this develops, um, we could have these gap fills, the exhaustion of that demand, wiping those buyers dry, pushing it higher, starting at the highs, establishing those kind of path of least resistance setups. But the 581.47 spot's a pretty important range, right? This is an unappealing weekly closure, and I would not mind seeing 564, but I think as far as execution goes, the smart play here would be, especially this week, short week with the NVIDIA report, um, which could be a good catalyst, in my opinion, on a markdown or a gap up / beat that is sold off, offering an IV flush opportunity and a positioning. I would not be opposed to focusing on some June puts off 142.62 on NVIDIA into the new week opening gap fill. But I'm gonna be pretty smart in this range, at least attempt to, because this is not such a solidified. I mean, the directional read is there. The long-sided trade is very unoptimal. It is very, very unappealing to me. I see no reason to get long, but I see how this could develop and how this could, in terms of redistribution, carry out the schematic that those larger parties exactly would want to do: trap the early shorts, right? Wipe those buyers out, and then mark it down, right? We have June OPEX, which is, the quarterly options expiration, which is really important as far as um, flows and what could occur in that window. We have obviously the quarterly expiration on June 30th, right? And those flows returning on June 9th. So, as far as schematics developing, I'm not 100% confident in anything here. And when that's the case, I don't really want to be in a trade. I was originally confident on this short to 581.47 to 577. I ended up cutting it all. And then, I kind of thought, okay, we can push up to this 490 or 592 range. Then I ended up chasing it. So a lot of second guessing myself and not sticking with the original idea. So I just want to try to do a little bit better this time. And just, you know, understand my bias, understand my directional focus up here being short side, but understand how to capitalize accordingly. And especially in this range, right? The puts I took up here were down 100% or up 100%. I ended up trimming them off like 40, but where they were up 100% here, now they're down about 20. So this is not an environment, I think, where it's really beneficial to try to milk it. I think there's a great opportunity here short side. I think, honestly, if I'm being completely honest, buying time up here, right? Buying quarter four, quarter 126 expiration, I would think new lows occur. Quarter four expiration of around 510 to 520 would be very appealing to me if I had, if I wanted to do that, which I don't really have the portfolio, I think, to justify building out a long-term option swing. I think that's not really the most appealing trade for me. But more or less, it's just, okay, we get a weekly footprint. Are we going to get a, kind of subsequent digestion of this, drawing into the dark pools and the gaps that are layered? If we do, my focus is going to simply be 592 to 581.47, 580. right? Just into this nwog, right? June 20th puts, I think, work phenomenally. I'll probably go June 30th because I'm a pussy. But that's about, 0.5% of risk for, a 1.5 to 2.5% move, right? And my goal there would be completely cash at the 580 to 580, 150 range. Specifically because of the fact that if this buyer pins us above there, that'll be a sweep and reclaim to some extent, right, of that new week opening gap. And that could be the prop that takes us to 600, or the draw that takes us to 600. However, if we see this, if we see the gap fill, if we see a lower high established, it would be something like this. I would take it to the closer, and if we see a lower high established off of the open of the week, I think that could be a reroll opportunity, risking that, especially if it's golden pocket or a gap fill to some extent. More than likely, if it fizzles up into the video report, marks down, digests this, I'm still in a short the lower high mood to some extent, mode, focus, until those June flows return. Then you could get something like this. You could get the reshort it to the break of structure, cover it, and then roll it again off 580, 147 for a push down to 564 to 570. That's my focus. If it's something like this, right, and I can kind of go back and look at the election gap as something that was relatively similar in terms of this was a 3% gap, this was a 2.5. Obviously, it's a little bit more relevant. The election, the the candles are relatively similar in terms of the wickage within that and the closure near the highs, and then the subsequent exhaustion, draw into that gap, rally to new highs on low volume, kind of digestion in terms of awaiting that Fed meeting, right, and that UT and those flows expiring. This was expiration, right? We get the breakdown, we get the notable gap sweep on the 20th. We have those quarter four flows in terms of the largest index expiration, kind of propping this up, and then the largest stock expiration in January, and then we get the gap down. Second subsequent attempt within that gap, the first low of this sequence, the lower high, digestion of this Fed print, subsequent secondary lower high or lower low bid to begin the year, lower high in the gap fill, and then we get that kind of footprint on January 13th in terms of the full gap fill, 3 lower low accumulation. This rallies us again. It's very exhaustive though, right? So they exhausted the liquidity in the buyer within that gap is very weak, and then you see the break and subsequent lower high off of that previously established support during quarter one. So this is going to be a focus of mine. I think if we get something like this, right, where like I said, it'll be a move up to 592. I'm going to look short on June expiration down to the gap fill of the overnight of the new week opening gap, right? I'm simply going to look for that, right? I'm not going to look for anything more in terms of this trade, right? It would be a move into this gap. I would cover some here, look for the last third there, maybe take 9 contracts, do exactly that. And then after that, if we develop a subsequent lower high following the fill, if a buyer fails to pin us above 580, 147, then I'll look to short to a new low, and under 576, look to short to the gap fill. Now, as far as the sequence this can develop, this can definitely develop something like this, right? We can establish this, we can break down, we can establish a new low, we can develop a lower high, we can establish a third low in here, and then those June flows return, and we get that rally kind of propping us up on maybe the June options expiration flows, right, which can always turn bearish, but maybe those can prop us up on an imbalanced rally in the June OPEX. The expiration is the 18th, if I'm not mistaken, so don't really have to worry about that. And once those June flows expire, that can develop the UTAD of this range, and then we can get that summer sequence in terms of shorts being very vulnerable. So, that's just my focus here, right? QQQ is kind of similar as well. A very notable footprint on a weekly candle, the highest volume since April 7th that week, right? We fade the highs here. I would not be, if we establish this, like I said, we could push into here and then get like one last push to the 530s. I'm not 100% sure, right? I think this is a difficult range nonetheless. I think that less is more. That's why the only ticker I'm really focused on trading is SPY. And I do think that, in my opinion, the better short comes post-June OPEX. In terms of potential UTADs of this range, like I said, if we can fill the 564 gap, and we can get those June flows propping us up on a low volume float into a UTAD, right? If it can develop like this, then we can develop a subsequent test, maybe off 589, and short these lower highs on a little bit more of an aggressive position, in terms of really being aggressive and getting the move down to 554, right? I was obviously a little bit confident. I still am confident in 564 pre-June flows returning, but it genuinely just depends on how this develops. Right now, I'm really only focused on this range into the nwog, right? And then after that, I'll see if a subsequent lower high develops. Like I said, if they pinned above 581.50 or not, right? So that's a focus of mine. XLF is a large focus of mine as well, but I look at a lot of the individual names in this sector, and I look at the sequence that we developed in January to early March, and I think that this could be one that takes a little bit of time, right? This is something that takes a lot of time after such a rally to change hands. We don't have a notable footprint yet. I mean, we have a notable exhaustive look the week of the 12th, into this previous distribution, into this gap fill, into the 2021 highs, right? Relatively important areas within the chart. But we don't have we have a really nice leg, but it's one of those legs that, similar to this range in early February to late February, right? We developed kind of a floor here, exhausted those buyers, got the UTAD of this range, and then the subsequent markdown, right? And so I think it's going to be one of those things that becomes more appealing as time goes on and as this range develops and as the hands change and as the demand is wiped and the campaign is established. I think that these will take a little bit longer than I initially thought, and then a lot of people initially thought, right? And I think this could lead into the better short being post-June OPEX, right? Maybe even post-quarterly OPEX. I would love the SPY 564 gap fill, post-June OPEX, a rally propped up by those flows, and then a UTAD into a July short opportunity that's far more appealing to me in terms of more notable footprints, right? But you're even seeing the intraday price action be very gross. The volume come in at the highs on wicks, volatility compressing, digesting, especially the move that we made last Wednesday. And so I'm very, very short side focused this week, and I think my execution is going to be beginning to take entries around this 592 range with room all the way up to 595 and potential to short this too. I'm going to look for 580 to 584. I really do think that 580 to 582 is a more appealing target to me this week. I would not mind that. Right? Obviously, it doesn't really matter what I want, but even just looking at Schwab, right? This is a higher time frame distribution. I think that's been occurring since July of 2023. You have a daily distribution occurring here. But even when you look at this UT, right, this UT takes a lot of time to develop. You have short-sided opportunities, but the best, most appealing short comes after the influx of volume, the leg lower, and the weak pop on the lower confines of this distribution, right? So, if this would be the lower confines, right, if we could, establish that change in character within this a daily distribution inside a weekly distribution, this would be the more appealing short to send this to 81.50. Even if they bid these lows, exhaust these buyers, right, and then we finally get that divergent pop off of 86-ish, 85, 86, where you had that buyer on Friday show his hand, right, that would be a more appealing short than kind of trying to guess up here that we're topping out, right? The daily internal change in character is as important as the higher time frame distribution. So that's something I'm looking at on banks as well. I wouldn't really mind, like I said, we can get this push up into the gaps, we can get the reclaim, maybe that buyer can pin us above 50.16, or maybe establish a new low. I'm pretty confident in the bank shorts, but this needs a little bit of time in my opinion. A lot of these names look very gross, especially these Visa and MasterCard all-time high failures, but they just may need a little bit more time, right? It may just need some more time is all, right? So, break even on the short now, but this is my focus going forward. And I'm going to look to position myself this week, especially if this is on this low volume, exhaustive gap up. I think we can get the pullback to the full nwog, and then I can cut my short and go from there, right? And see if we can get the subsequent structure that would be developed on like an hourly look. As far as, like I said, like if we can get this, I can cover my short, and then I can re-roll it off 586 to 576, and then, trailing stop at 581, and then potentially capitalize on the move. I do think that it's a short-sighted environment, but I just can't justify, especially after the way that I handled that initial trade. I look back and it was great, and I had a target within a 5-point window, and I just misexecuted, and took on risk over the weekend, and I gave back all my profits. But even looking at that, this is not such a top, right? This is a top that I would not be surprised if another high was sold off, right? But I would also not be surprised if we got a short this week. And my focus is SPY and NVIDIA, right? I don't think XLF is ready. I think a phenomenal trade sets up on XLF and its individual names. My main focus is Schwab. And that's a very, very main focus of mine when the timing is right, right? When you develop something like this, you can even just see, we may need a little bit more time, right? We haven't seen the most notable volume pouring in up here. I'd love maybe, like I said, a stall within this range, another bit of these lows, a high sold off, breakdown, and then subsequent lower high that would be very more appealing to me. And then, like I said, volatility, digesting this move. I like this a lot. I think it's a big red flag. I do think we get volatility this week. I do think we see lower this week. I would not be surprised if we see a new low into that gap this week off of 592, right? That's why I'm going to position myself. I'm also going to cover, target the nwog, and then see if a lower high develops. And if that's the case, then I can kind of infer, especially if they fail that 581.50 spot, that the draw is going to be to a new low within this gap, and that could be my next target, right? And like I said, if we develop a new low, I would cover all my short exposure, and I would wait for the full reclaim of 581.47 to 576.74, right, which is the election gap low. There's a lot of red flags. Bitcoin all-time high. We just saw some news on the Treasury Department or something. They're selling that to you again. I'm sad to say. They sold this to you. It's insane work how everybody just gets like fucked, right? Like who is buying this? Off of the news that they're going to raise like $2 billion for cryptocurrency. But like I said, this is a phenomenal short setting up. I hope it's into the report. If we get the run up, it's going to be very similar to this day, and I probably will just look short on probably 1 DTE flushes on small size into the gap fill, and then June's. My June target would be 131, so this is a main focus. Microsoft is one that is also a very unappealing chart, right? It's actually underperforming substantially intraday if you look at the indexes in comparison to Microsoft. It's just, after this report, you get a lot of volume on it. It's filling the January peg at the beginning of May, and it just gives you this float, right? There's a lot of mass selling within here. I saw a lot of selling happen at 460 today on a ton of volume on that opening 5-minute print. And it was more or less just, it's one of those names that's going to revert into this peg that we established in May, similar to how it was drawn into here. It's just simply how these things work. There's not enough demand up here. The draw is going to be lower. But, I'm not going to really short this. It's just one of those names that looks very unappealing alongside, especially with this weekly closure, right? Unappealing. Meta as well is very gross, but as I said, these could take some time, right? You have the preliminary sign of a seller on the initial breakout of the April 9th print on the report in April 30th. And then we continue to get this float higher where you see the preliminary signs of a seller. You see a relatively ugly weekly sequence, but it's not really a short for me quite yet, right? I don't know. Amazon is actually not an appealing short for me at all within this gap, right? It's kind of like a bidder within these lows showing his hand, and I think the draw is going to be a little bit higher. But nonetheless, on a higher time frame perspective, this is not an appealing long. But within this gap, I wouldn't really flip short. I don't like Tesla. We're actually pulling up that November 9th or November 11th high of day, which had a lot of relevance behind it. Established that lower high in February off of it. So that's something that's pretty big here. And the potential for a UTAD of this range, right, where we have a larger seller showing it. So Google has a massive footprint here. The lagger overall, but a nice rally from 141 to 170. Like I said, that would be my target. We're discounted for a high range. and we're seeing that seller show his hand a little bit on a more notable footprint in comparison to the broader market. On the Google chart, not really a short focus, but one of those names that's just reverting to the mean, in my opinion, right? Apple is one that, this is a very hideous chart, but this could still push all the way up to 224, right? So if that aligns with the June flows propping us up to the 600 territory, 224 would definitely be someplace I would watch in terms of a lower high on Apple, right? In terms of the distribution stemming from quarter two worldwide developer conference on an influx of volume, and then the distribution panning out in quarter three and quarter four with the UTAD LPSY and now our potential secondary LPSY here within this distribution before we kind of start the markdown that I think hasn't really happened yet. I don't think that this is I don't think that this is an accumulation that has changed hands enough and been established that will prop us up higher, new highs, especially with the gaps above. We're seeing that seller on the 14th of April. We're seeing that seller into the report, and then we're seeing that peg stalled and just a float lower, which is kind of unappealing short side for me, but something I'd look at 220 for nonetheless. So a lot of red flags. I'm short side focused, but I've kind of, especially this week, I'm gonna be less aggressive. I was pretty aggressive that May OPEX week, end of expiration. I had a really good trade setting up. I just took it off a couple points too early, right? And that was my fault. And then I got a little bit of a chasing. I had a little bit of a chase on that trade that I attempted on over the weekend, right? Which was very speculative. I was kind of anticipating some news to mark us down in the full gap fill. But now I have a good perspective on what I want, right? I kind of want that 592 to 580 short. That's going to be my target. And then if we establish a lower high off that, great. I get to short it to 570, 575. And then if we establish a real kind of reclaim pin under the 580, 150 spot, great. Then I get to short it to 564, So this is going to be a week for me of really taking in a lot of information, kind of being a little bit patient nonetheless, just comparison to how I was before. I don't think that this is going to be the top, but I also do think that this offers a great short-sided trade into the gap below, especially this nwog. I wouldn't be surprised to see if this new week opening gap gets filled, especially if we continue to get this kind of distributive look where you have the nice volume of open, but if we can get that kind of distributive intraday look still up to 492 or 592, especially if it leads up to the NVIDIA report, I think that'll be a catalyst, in my opinion, right? So, just gonna be patient, right? I was a little bit too aggressive here. I mismanaged the trade here, but I do think an opportunity sets up. I'm just gonna take it one step at a time, and trade it to the nwog, right? That's kind of my focus going forward. I think it was, like I said, way too aggressive and way too speculative on some data sets hitting us. But I do think that this news gets sold, and I do think that it can happen off the NVIDIA report. I do think that a trade sets up from 592 to 580, 585 range, and then we can evaluate, like I said, how the buyer acts if they pin it above the nwog on May 12th. Anything else? RTX got slammed off the rip. I'm not surprised. I would not mind taking June or July puts if they pull back into 137 to 138.50, but that depends. Palantir, like if this gives you, all these bull flag traders right here, if they can all get stopped on the breakout and then have to sell it, like that can be a big counterparty liquidity generating breakout, and a lot of people can get wiped there at new all-time highs. And I think this does decline, but I think this is a distribution that needs a little bit more time. Hood finally sweeping the highs of the report in February. We still have the full gap fill post IPO up to 70.39. So this is something that could. This is something as well that's a higher time frame distribution, right? I think we make from like $6 from 2022 lows to 2025 highs are up 900%. There's more profit takers on a larger scale than there are buyers up here, right? It's the same thing with Palantir from like $3. Yeah, from like fucking $7 to 125 in 2.5, 3 years. you're seeing a larger distribution take place. I don't have a good outlook for the stock market, especially when a lot of these names look like this. But these things take time, right? You have to understand that, in my opinion. So that's my focus for the week. My focus for the week is solely 592 to 582 on June 30th puts and the NVIDIA report. Anything other than that, I'm waiting on clear lower high or a clear kind of pin under 581.50. So that was my issue this weekend, the Friday, taking that short. And that was kind of how I just mismanaged the initial position, came back my profits, but spot an opportunity setting up this week and then see how we go from there. So just a little update. But yeah, I mean, insanely low volume on this futures markup. I do think this gets faded. I just don't know if it's going to be to a new low or not, and I don't know when. But I am definitely in a short-sighted mood. And to June flows returning, I do think we can meet 565 before then. The way I'm going to execute is going to be a little bit more cautious than I would originally have, just because of the potential for this to, one, I can definitely see this being an unappealing short to try to milk, and it taking a little bit more time and giving you that kind of stair step down instead of an elevator, right? Which is kind of the opposite of what most breakdowns give you. But the way that this is occurring, like I said, I would not mind this. Cover my short, re-roll it, and we get like the 3-4 lower accumulation in here that sparks a rally to new highs of this range, and that's a full-on U-tag of this redistribution. So I'm still looking 564. I do think that 592 can push us down there. I'm just going to short it to the nwog and then re-short a lower high to a new low and then re-short a lower high of 581.50 if that is kind of the sequence we establish here. So I don't know. I'm not really confident in a lot here, except for the short. And even in that sense, I'm just speculating on the ways that this can pan out. And a lot of them make a little bit more sense to me to be a little bit more patient than I was initially, right? And, take the opportunities, but be patient on the big picture of things. Especially, I think banks offer a phenomenal short. I just don't know. I don't think this lower high is going to give us that. I think that they could wipe out a lot of the buyers in these gaps below. I think that we could see a push to a new high in this range or a new all-time high. And these things just may need a little bit more time. So that's pretty much it for a little update on how I fucked up and how I can get it back.